Welcome to the KOSEC Show. Join the KOSEC KODARI Securities team as they share their insights on the Australian share market, discussing some of their best performing companies, macroeconomic news from offshore, including local domestic news, foreign exchange, as well as commodities. If you have any questions regarding the share market, our phone lines are open. You can dial in on 1300 854 151 or alternatively, email info@kosec.com.au. Exclusively on this show, each guest will reveal their hottest stock pick. For more information on any of the topics discussed, go to kosec.com.au. The information featured in this program is general in nature and does not take into account your personal circumstances, needs, or objectives. Guests appearing on the program may own or have commercial arrangements with some of the companies mentioned. Before making any investment insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good afternoon, investors. My name is Will Brownlee, and welcome to the KOSEC Show, where we discuss all things relevant in the market this week: macroeconomic data, currencies and commodities, top performers for the week that was, and of course, our hottest stock picks for the week to come. Before I go any further, as always, allow me to introduce you to my investment panel and resident experts on the market. To my left, the ever wonderful Caroline Wong, back from his brief hiatus, the ever stoic Gabriel Ryan, and of course, our senior trader, Linson Cow. Right. Ladies and gents, let's kick things off. And as always, I always think, what else are we going to talk about this week? There's so much that we can unpack. But let's really go to what's on everyone's mind, is this impeachment. Now, they're having a vote, the 25th Amendment. What's happening with Biden, Pence, the whole Trump fiasco? Would you care to share some gleams of knowledge, Mr. Cow?
Sure. I guess we'll just start with the highlights or the lowlights. So that we could talk about this for quite a while, but well done. He's been impeached twice now. First guy to do it in history. So the House has passed the impeachment resolution, but it has to be passed the Senate, then have to have a trial. So we went through this last year. We're going to end up going through it again. It's likely going to be delayed, the trial I mean. It's going to be delayed until after Biden's inauguration, just so he can get his house in order, because generally what happens is the Senate is meant to dedicate 100% of their time to any impeachment proceedings, and obviously that's terrible timing if you've just got into office and you want to pass new resolutions and legislation.
Now, correct me if I'm wrong, because when I thought about it, the first impeachment sounded like there was a lot of stuff to unpack. You had witnesses coming forward. Everybody was sort of talking about different ways and how this is spun. This seems to be fairly clear. You know, you're going to look at the text, you're going to look at what he said, and you're going to decide, did it incite, did it not? Is it a yay or a nay? It doesn't sound like it should be that long. Is it going to be quicker this time?
I mean, he should still put up a fight, and there are avenues to defend this. Like, I think the main one that we spoke about earlier today is it's more procedural than substantive, but it's that, do they really have jurisdiction over him once he is no longer president? Because they've never attempted this before.
So you're saying that because it's not a criminal case. It's not necessarily a criminal case. It's not like he's getting he's getting arrested or going to go to jail or anything.
Right,
it's just an impeachment. It's just his political career.
Yeah, just a casual impeachment. Yeah. So I think Chief Justice John Roberts, who's the Chief Justice of the Supreme Court, he does oversee the impeachment trial. So that gives it a little bit more, I guess, legal legitimacy. But yeah, it's the senators, most of whom will have zero legal experience, who are his, I guess, they're the judges or the jurors in this case.
And he comes to this with his own, I suppose, backing and law. Not his own backing law. He's got his own lawyers that are obviously coming to this to defend him and stuff. I heard, and you can verify this if you'd like, is that there's a lot of lawyers are saying they don't want to work with him. I know that Deutsche Bank has said they don't want to do any banking business with him. I know that the PGA doesn't want to use his golf resorts anymore. A lot of people are stepping away saying, no, I don't want to go.
Yeah.
Is that the case?
It certainly is. So he did have his fair share of backers in the previous impeachment trial for multiple potential reasons. No one's really stepped forward or wants to publicly admit that they're going to come and bat for him. Now, you could idealistically / moralistically say it's because they really condemn his actions, so they don't want to get involved. For integrity reasons. I think more practically, it's this whole cancel culture that we find ourselves in. I think maybe the younger members of the panel will understand that better than myself, but it's more like if you own a law firm, or just even for your own personal reputation, if you step forward and say you're going to defend the guy then you potentially end up losing a bunch of other clients in the same way that, like you said, the PGA is cancelling him, they're going to cancel you. I'm not saying everyone wants to defend the PGA, but you know what I mean.
Do you think it's strange? Is it a weird thing to impeach a guy that's about to leave office, or are they justified? The whole premise being that, the 5 people died in this riot. Is it justified? Is it not justified? I mean, what is it just moralistic? What's the reason behind why they're doing it?
Yeah, actually, I'd love to hear other people's opinions on this as well. So I've kind of flip-flopped on this as well. So I think last week, if you'd asked me, we may have even discussed this. I thought, it's 2 weeks, just let the clock run out and just let him go. He's gone anyway, right? But then as it sunk in over the weekend, I thought, actually, it's a bad precedent to set where you can let this sort of thing happen and there are no consequences. So I can understand why they are pushing forward for it. And he has lost a lot of allies as well. I think the most stunning one would probably be Mitch McConnell, who I don't remember him ever publicly criticizing him during his tenure, but then slowly started distancing himself as the election results were being counted, and now has apparently flat out said in private to certain people, sources, that he has no problem with the impeachment. So I have a feeling that if he were to vote in the trial against him, a lot of other Republicans may fall.
So they just follow suit and everything.
I guess there's more cover if McConnell goes that way. So, well, he did it, so let's focus on him. And by the way, I'm going to vote against as well.
It's so weird. It's like you say this thing like, oh, if one person votes, then the others will follow. And I suppose in my youth, or when I was a little bit younger, I probably thought of the House and all these politicians having this sort of, this, I suppose, Greek godlike throne. They sit up there and they're so all high and mighty, and everyone's elected them for that, and they can't do anything wrong.
Sure.
The more that I've been watching this, the more I've been thinking about, everyone's trying to throw mud at each other. Everybody's trying to stick it. They're kind of latching on to someone. Everyone's following anyone else. It's quite peculiar. Would you agree?
Yeah, it's literally called politics.
Yeah.
So I think that they are still people.
Yeah,
as well.
absolutely.
It's an amazing thing. So
absolutely. Now, one of the things that we've been looking at quite a bit is what the effect on the market has been having. Has it been good? Has it been bad? What's it been like?
The actual impeachment, the market's just shrugged it off for now.
Shrugged it off. Yeah.
I don't know if this because they were expecting it. I guess it doesn't really matter because it's not like he had a bunch of amazing policies lined up and then the impeachment's like, well, we've got to get rid of these. He's not even the president anymore. So the market seems to have shrugged it off.
That's going to lead into something I'm going to discuss with you in a second. We'll be back we'll get right back to you guys. But listen, earlier on today, we actually had one of our viewers with a video question they posted in, and it actually pertains to this exact topic. So let's go to that right now, and we'll be back shortly.
Hi guys, what does the Democratic blue wave mean for the markets in 2021, and what sectors do you think will benefit? Thanks.
So there you have it. Blue sweep, what is that going to be effect? What's the effect going to be on the market with a blue sweep? Now, unpacking that is quite interesting because a lot of people have said that, I suppose, Trump was so good for the markets. Is that going to be the same for a Democratic wave? You've been doing a little bit of research on it yourself, Caroline, and what did you come up with?
I'm actually going to talk a little bit about the relief plan that incoming President Joe Biden has been talking about. Can anyone guess what's the name of the package called? Any guesses? It's not that hard.
COVID relief package.
Close. It's called American Rescue Plan.
American Rescue Plan.
So it's designed to pump money into the economy and contain the virus. Very comprehensive plan, but for time constraints, we'll just focus on 6 key points. Firstly, the stimulus checks, it's a central promise made by the Democrats. It will see direct payments of $1,400 to most Americans. And then this, along with the $600 paycheck announced by Congress in December, will take the total amount to $2,000. In terms of vaccine, 20 billion vaccine distribution program will allow residents, regardless of all immigration status, to receive free shots. In terms of state aid, 350 billion will be allocated to state, local, and territorial governments who in recent times have experienced high expenses and lower revenues. Finally, in terms of good news for employees, federal minimum wage, it's going to be set to double to $15. It is currently at $7.25. For families, tax credit for low and middle income families will be expanded and, more importantly, refunded for the rest of this year. And finally, for small businesses, Democrats intend to leverage $35 billion in government funds into $175 billion in low-interest loans to fund small businesses.
Wait, so the minimum wage was $7.50
And he's now he's
$7.25.
it's 15.
for young people or just everyone?
Everyone.
Wow.
So this is a federal, at the federal level, but of course, states, a few of them have that higher
Sure.
than that of the federal level.
Okay.
So I suppose no doubts about it. That seems to be a big push into physical stimulus. How's the market going to take this? Gabe, I know you've been keeping an eye on things. How do you think this, just going back to our question, how do you think this plan, what do we call it, Make America Healthy Again, or whatever, what are we calling it?
That's actually a better name.
Yeah, I think Make America Healthy Again. All that package, what's that going to do to the markets? Is it, what are we thinking here?
Well, look, I think the general consensus is, and has been, I think, for quite some time, that general weakness in the US dollar, which is what would follow this most likely. I mean, more easing would not be.
Why weakness in the dollar? Just
well, I mean, continue money
more money flowing in.
Yeah, naturally, and this isn't just something that's happening in the US. This has happened globally.
Yeah, because what we've got to understand is all of this money that they're giving out to people, it's got to come from somewhere.
Yeah, well, exactly. And again, to reiterate a point that I mentioned, I believe on one of the earlier podcasts, spokesperson for the Federal Reserve said there is an infinite level of cash at the reserve level. So they will do what needs to be done. Biden will do what needs to be done. Potentially, this could be a good case for equity markets.
Okay, so you think that this is something that could do quite well. You think it would do quite well. I think it's quite interesting. Under a Trump administration, the market did quite well, but it did very well under, and I think we mentioned this in a previous podcast as well, it did very well under the the Obama administration as well. So I think both have got their merits in behind it. If you were a gambling man, which I know you're not, what do you think is going to happen to the US market this year?
Well, my predictive powers aren't quite the same as maybe some other people here, but I think the case is...
You didn't pick iron ore, that's for sure. You weren't the iron ore picker.
Well, look, I think there's a bullish case to be made for markets in the US, globally. Things to be moving in a positive direction. We have the advent of this vaccine, now 3. Potentially we could really see things reopen up and do very well moving forward.
And of course, we're talking a lot about how this is sort of affecting the US.
Yes.
Okay. We're not even really talking about ourselves, but would it be a safe assumption, and I'll take this over to Mr. Cow, would it be a safe assumption that we will follow what the US does? If the US continues to move and rallies nicely, we will follow suit. Is that normal, do you think?
Yeah, there should be a correlation. I don't know if it's going to be a perfect correlation, but yeah, surely a better US is generally better for everyone globally, and we are part of the global investing family. So yes.
Perfect. So I know you've never made a bet in your life, because I know you're really not a gambling man. Same as Mr. That's an inside joke for everyone that's watching. Mr. Ryan, he's said it's going to be bullish. What are your thoughts? What's the US going to do throughout this year?
Look, there's two aspects to this. So it's a yes and a no, like the answer for so many things. So all else equal, this comes back to the question. So all else equal, Republicans generally are better for the market than Democrats. So let's forget about the actual ideologies and policies and that. But generally, economic policies, a right-leaning party is going to be better for the market. However, there is going to be more certainty. Two aspects to this. Trump is just a little bit, I'm trying to think of a better word, volatile, let's say. So more volatility, higher risk, right? Higher risk premium, potentially lower equity prices. But on top of that, because of the blue wave sweep, now they're not going to have things like things being stuck in one house. We're not going to have potential government shutdowns.
Things will move a bit smoother.
Exactly. So this would have obviously happened as well if the Republicans had swept everything too. But there's just more certainty there. And I believe there was a second part to the question, which was about sectors.
We're going to discuss sectors in the third section of our show. We'll go into the sectors, into that one there. So you're bull US, and Australia as well for both of you. Caroline, bullish under the Biden administration. What do you think the US is going to do? What do you think the Australian stock market's going to do?
Bull for both, but regarding to the Australian stock market, I have a little bit more to share within the third sector.
Okay, perfect. So we would two parts to this question, as most good exam questions are. They are a two-part question, and we will discuss the second one later in the show. So Ladies and gentlemen, we're going to take a short break. If you have any questions for our panel, please feel free to take a video and email it through to info@kosec.com.au. Now, everyone who does will receive a copy of our book, Stock Market Success, Retailing in Dymocks, for $39.95, or our magazine, Selling in News Agencies Australia-wide, for $19.95. We'll be back shortly with your currency and commodity overview.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael Kodari forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael Kodari creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Do you follow currencies? Want to know how the Aussie dollar is travelling? Do you love commodities? Do you see gold prices rising? Do you see more demand for oil? Do you see the world economy growing? Get the latest in-depth analysis and discussion on commodities every week from real traders. Get real insights only on the KOSEC Show.
Welcome back. Let's talk about currencies and commodities, all things that shine, sparkle, fold, and make the world go round. We're going to jump straight into it. I'm going to go straight over to Mr. Cow. Talk to us about gold and oil, but more importantly, how this dollar over in the US is affecting things at the moment.
Okay, so let's just start with gold. I think it's a little bit simpler to tie into the dollar. So generally, amongst other things, inverse relationship between them. So the dollar has taken a bit of a breather from its very consistent downwards slide. I think it popped up a little bit this week. So gold did drop. It was about 2.5%.
What's that on? Just optimism, or just because I mean this? If you wanted to find something to short, if you were looking for a very good looking short, that seems to be going in a short
on a technical
direction.
basis. That's one of the easiest things to say. Yeah.
All general advice, viewers, please don't all just suddenly rush out and start leveraging on a short. But yeah. I'm just saying that doesn't look like a very healthy chart.
Yeah. So I mean, we could talk about this for such a long time, but as I don't want to step on Caroline's toes either, but as bond yields and further out bond yields, longer dated, like say 10-year bond yields,
right.
start rising, that's going to create a little bit more demand for the US dollar. So that is driving part of it. I won't say any more than that, but we have seen gold. I looked for the past couple of weeks. I picked 2 weeks because that's how long we've had in 2021. It's fallen about 2.5%. So it has taken a breather. I'm not really sure where it's going to go from here. Now, if we go back to oil, this is a bit less influenced by the US dollar. It does still have a slight influence. There's just so many other factors and players who influence this, particularly OPEC. So I know our resident expert, Gabe, probably can shed more light on this, but the Saudis did, out of goodwill, say that they were going to voluntarily cut more output, and that's helped keep prices elevated. On top of that, just general optimism from the vaccines.
Yes.
Also filtering through as well. Oil is actually up 11% this year in 2 weeks, which is pretty good.
2 weeks. Gabe, you got any comments on that? 11%. You're talking this year, so you're talking.
Yeah, unless I've misread
days,
this. Yeah, we're talking. Yeah.
Well, I mean, you can't deny that it's moving in a positive direction. The market maybe is forward thinking. The reality of the supply demand dynamics not necessarily really factored into what it's doing now, but I think those Saudi cuts are probably being factored in.
Because in my tiny mind, I'm sitting there thinking, last year I saw something I could not for the life of me fathom how that even works. We saw negative prices on oil. I'm sure we all remember that. Then this year, we've seen it going up when everything apparently is locking down. It's not like suddenly people are out there driving. I know that's probably a very obtuse way of looking at it, but is this just too exciting? Are we in danger of having a crash in the oil stocks, would you say? Well, not stocks, but in the oil market, would you say? Is it too overheated right now?
Well, it's quite a hard thing to say. I mean, if you compare it to where it was before the pandemic, it's significantly below where it was. And I think the odds of ever going negative again are significantly less than before.
Yes.
Given that is obviously a bit of a concern for oil producers. However, I think moving forward, the market is forward thinking. We do have a lot of positive vectors which could potentially support oil moving forward. I don't really see any reason why it would go down as much as it did.
Okay. So is it a good time to be looking at oil or oil stocks or anything like that at the moment, Gabe?
Well, look, potentially. I think one thing to take into consideration as well is this new mutant strain of COVID, which has appeared all of a sudden in the UK and South Africa. It's even appeared in Queensland, I think, as well.
Wow.
So, it's spread its tentacles far and wide. Now, the degree,
I like that. Very good.
Not medically proven, though, right?
Well, yeah, the degree to which that will have any impact, I can't say for certain. Probably something to just keep in mind. Naturally, all the vaccine producers have said that, or I believe all the producers have said that this new strain, mutations, the vaccine should work against it.
Should.
It
Hopefully.
should. So that's maybe something to,
Factor in.
exactly.
So the future could look quite bright. It's an interesting thing, isn't it? Because a lot of people hear through the news. I mean, very rarely will we hear about stocks in the news. I know we do. I know a lot of the time you do hear about stocks in the news. But when you consider that there's over 3,000 stocks on our Australian exchange, realistically, we don't hear about most of them. We hear about a couple, but we don't hear about most of them. Yet a lot of people will hear about what the price of oil is doing because they all put petrol in their cars, etc., etc. Everyone's very mindful of that. So we field a lot of calls coming through from clients or from prospects, from anyone saying, hey, listen, the price of oil's going up. Is it time to get into oil stocks? But we've looked at a lot of them, and there's two ones with quite good fundamentals, or one with quite good fundamentals is Beach Energy. That's done very, very well in the past. But Caroline, still not looking that great on a technical chart. Would that be right?
Yeah, it's fundamentally very sound among all the stocks that are currently under our watch list, but still not convincingly enough. It's not looking that good on a technical basis.
And ironically enough, something like Oil Search, a stock like Oil Search, which is something else that we've perused the pages of before in the past, is not got great fundamentals, and yet it's been doing very, very well. It's kind of at this, is the oil market struggling, and is stock struggling to catch up to what oil is doing? Are they confused as well? Gabe?
I think everyone's confused.
Everyone's confused by my question.
Yeah, well, listen, I think, again, this has been said so many times, everyone will know it. One of the main vectors for oil price changes and effectively manipulation is OPEC.
Yes.
Of which there is no equivalent officially.
Yeah.
So that's always something that's going to be there on the back burner or at the forefront of any discussion in regards to the future movement of oil prices. Naturally, I'm sure the Saudi Arabians, not out of their goodwill, are doing these things because they love us. But it's, certainly something to keep in the back of your mind.
Perfect. So that's oil and that's gold. Let's jump over to Caroline, because I know you have been having your eye on ore a lot. Let's keep our eye on ore, or iron ore, the commodity.
It is still early in the year, but I thought there was going to be an upping of the game this week.
You thought there was going to be an upping of the game?
I was expecting more, but you got time.
I've always, whenever, in any job I've always had, I've always thought, always underachieve, and then no one expects anything of you. So, I've been trying to underachieve as much as possible. No one's expecting a great joke out of me today. But let's go to iron ore. 172 US a ton.
Yep, correct. Still holding up very well. Gained 1% overnight.
I remember it was like less than 100.
Exactly.
Like not long ago. That's insane. When's it going to stop?
Never.
Never. And that's you're confirming that. That's your conviction. It's never ever going to stop.
Okay, statistically speaking, yesterday we received some figures from China. They actually recorded record iron ore imports last year. So that's actually 9.5% higher than that of the previous year. And it's based on the narrative that we're all familiar with, the infrastructure-led recovery, which led to the demand for steel.
So they've got the demand for steel. Gabe, is this going to be, is our sort of alliance with China, is that going to be affecting it? Because are we still got political tensions there, or have they just sort of all evaporated? In the absence of
I haven't seen it on the news as much as towards the end of last year, but I imagine that politicians don't have that short memories. They probably all know what's going on. I think, the issue with iron ore is that there is no issue because the Chinese don't really have their own independent supply, which is something they're moving towards, especially in Africa. They're trying to develop resources in that continent. But that is a little bit more forward thinking.
Yes, right.
At this stage, Brazil, India, Australia. And relations with India aren't that great.
Okay.
Brazil is maybe amicable, and with us, we all know.
But you think Brazil is also amicable, but it's also quite heavily plagued by COVID. We are not heavily plagued by COVID as much.
Yeah,
so.
typically speaking, Brazil seems to be reporting at the very, at least the second highest number of cases per day, just behind
incredible.
The US, yeah.
On the upside, beautiful beaches.
Beautiful beaches, great cocktails.
Beautiful women, great food.
Yeah, very, very good. Excellent. So, that's commodities, currencies, and the events that shape them. Now, are you a bull or a bear? Let us know. Our phone lines are now open. In the meantime, we're going to take a quick break. And when we get back, we're going to take a look at the best and worst performers on the Australian market this week.
The world changed this year. So did the stock market. Is it time for a change in your portfolio? Invest with confidence. Invest with a solid strategy. Invest with KOSEC, KODARI Securities.
RBA has cut interest rates to a record low of 0.1%. Returns in saving accounts are now shockingly low. We have never seen these conditions before. The good news is that the stock market benefits from low interest rates and historically has outperformed property or any other asset class. KOSEC uses a unique stock market filtering system called Lotus Blue, which helps generate solid profits for clients. During COVID in April 2020, KOSEC recommended Kogan, which went up 340%. In June, KOSEC recommended Saracen Minerals, which went up 23%. In October, KOSEC recommended Nickel Mines, which went up 33%. If you want your money working overtime, you need to know what stocks to buy and when to sell. That's where KOSEC can help. With no barriers to entry, it's just simple investing. Build wealth with a concrete investment strategy. Go to kosec.com.au. Get a free 7-day access to Lotus Blue and receive our top 8 stock picks today.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
Welcome back. Let's move on to our next section now and have a look at what the best and worst performers for the week were. Okay, I'm going to jump straight over to Caroline because I know you've got your famous chart, having a look at where there was a bit of weakness and where there was a bit of bullishness in the market this week. Take it away.
Just before I jump into the sector performance, I'd just like to answer your question you asked earlier regarding positivity. So I think the overall positivity in the share market is pretty good, like pretty positive. This is because UBS thinks that for the XJO, the year-end target for the XJO sits between current range to 7,600 points.
Yes.
So let's say we close at about 6,730 points. From now till the highs we hit in March 2020, that's about 7%.
Yes.
And from now to 7,600 points, that's about 13% upside.
I've been watching, and I'm in full agreement with everything that you're saying. I've actually been watching the market over the past couple of days, past couple of weeks, and there has been, even though the market may have been up or down, sometimes the market's been up 0.5%, and there has been a lot of red on screens. A lot of those mid-cap stocks that people know, just the BHPs and all the normal stuff is just really, really getting heavily beaten down. Then sometimes it's flipped. The market can be down, and sometimes these mid-caps can sort of be up. And I think a lot of that's to do with financials. Because if we look at your chart, you'll see that the financial was in the green this week. Is that correct?
Yeah, but it's actually the second best performing.
So that could be why, because our market's made up so much by the banks, so heavily weighted towards the banks. Is that one of the reasons why we're moving up? Is this a bit of a realistically a false movement? Is it? Or, well, I mean, what are your thoughts on that? I'm trying to trick you.
No, I don't think it's a false movement. It's just overall very positive sentiment around stock market.
Okay.
But let's jump into our top performer this week. Best performing sector is energy, up 0.85%. So as what Linson said earlier, energy stocks continue to lead the gains due to the rise in crude oil prices. So oil surge, Woodside Petroleum, they both have done about 4 to 5% this week. On the other side of the coin, as the worst performing sector is consumer staples, down 0.73% this week. So supermarkets clearly underperformed. Coles fell 4% this week, but on a very
people just stopped eating. People just decided, no. I suppose it's the New Year's and a lot of New Year's resolutions that shed the COVID weight. So
probably just stopped buying toilet paper.
Probably stopped buying that.
But notably A2 milk.
Yes.
This one, 5 red candlesticks in a row.
Wow.
Down more than 6% this week. So it's not looking too good.
We spoke about this on the podcast last week, but that is just a horrific pullback for that stock that did so well. I mean, we were watching it from $2 to $4 to $5, $6, all the way up there. What were some other sectors that didn't do particularly well this week?
I think it was healthcare was down 0.5%, 0.56.
Similar to what it's been like in the past. What I want to do is I want to go over to Linson and have a quick chat about technology, because you and I have both been watching technology stocks get absolutely decimated recently. Big pullbacks, admittedly big runs up, but they have not seen much of a sign of life until relatively recently. Is it time to cycle into tech? Is this the turnaround?
It depends. It's a yes or no. I know that's an answer I give a lot of the time. So let's expand on that and elaborate. So you're absolutely right. There's definitely value to be had within the sector if we can get the right company. So macroeconomically, the need for tech is not going anywhere. There has been a sector rotation out of stuff that did well during the pandemic, growth things like tech into cyclicals and value.
Yes.
And that sort of doubled down when we saw the blue wave sweep.
Yes, right.
However, so I mean, that's good on a macroeconomic basis. And there are some fundamentally great companies like Appen Technology, for example, is APX. Great.
Yes.
And also, if we look at institutional valuations, a lot of positivity. So multiple buys or outperforms and pretty significant material upside in target prices. So everything lines up very nicely. Now, as you correctly pointed out, though, on a technical basis, some of these have not looked great recently, but they are approaching areas of value potentially. And for example, on the stochastic oscillator, a lot of them are indicating oversold. So for some of them, if we get the right ones, the answer is yes.
Because that's what I was thinking. I was thinking to myself, a lot of people are saying it's time to go to value, try to pick up stocks that are value. And I mean, there's a pretty strong argument to be made that some of these stocks, I mean, if we, let's just take Appen Technology, for example, to quote APX. That is a business which did phenomenally well throughout 2017, 2018, 19, all of a sudden it's absolutely crashed. It's about, it's a long way down. It's got horrifically beaten down. It's got a price target from Macquarie with around about the $40 mark, which is something around the space of about 80% higher than what it's currently trading at. Now, in my mind, that would indicate potentially an area of value for the business. Is it a value stock, though? Or is it just a growth stock that's been heavily beaten down?
It's the second one. It's clearly not the first one.
Yep.
So, yeah, you're absolutely right. And that's not an outdated broker report either. That came in December, I think. So
14, like halfway through. It's like less than a month old.
Exactly.
Yeah.
So, yeah, there's definitely value to be had there. So if we get it at the right time, certainly there is quite significant upside potentially. It doesn't even have to get to that 80, 90%. Right? But if it does, that's even better.
Because just think about if you're a client or you're an investor yourself, which I'm sure a lot of people here watching the show are, if you're the type of person who wants to get into value stocks, then you have to sacrifice the idea that a value stock might not really explode the same way that a growth stock will.
Sure.
However, is this an opportunity to get into a growth opportunity and get it very, very low in its range? It's very rare that you're going to get, I remember seeing Appen with a higher price target was almost unheard of throughout 2017, 18, 19, because the thing was running up so much. Would that be a safe assumption to be sort of looking at?
Yeah, a short answer, yes. But also, let's just keep in mind that most people don't just hold one stock, so it's not mutually exclusive. There are good growth stocks and there are bad growth stocks. There are good value stocks and there are bad value stocks. If you get a good value and a good growth stock, it's just good.
Yeah,
it doesn't matter what it is. So
yeah, obviously, I think, and you're exactly right. Appen's great quality business, both in terms of fundamentals as well. Let's go over to Gabe because I want to have a quick chat to you about an area that is doing particularly well.
Okay.
We are, as I said before, very heavily weighted towards that. To the financial sector, the banks, but we're also very heavily weighted towards the mining sector.
Yes.
But with iron ore close to an all-time high.
Very near it.
Very, very, and oil doing so well. I know nickel is on a 13-year high. Is there any more growth to be had from any of the commodities? I'm talking Fortescue Metal, BHP. Is there any more growth to be had from any of those those businesses?
Well, there's a very general question, so the short answer would be yes. I think you probably need to break it down into the specific material you're discussing.
Let's take a look at like nickel, for instance.
Well, I think nickel, this is one that I really, really like. And it's something that I have looked at.
So what does nickel do? What is nickel the commodity?
Many use cases. You'd be most familiar with stainless steel and EV batteries, lithium-ion batteries.
Okay, so that's nickel pig iron goes into
that's it. Higher grade refined into batteries.
Okay.
Now, what's really worth consideration, something I'm actually going to discuss later on, is that 80% of nickel discoveries have already been made.
Okay.
Right. So that's very significant, given that 20% of the available nickel is still left unmined, undiscovered. Most of those are in Canada, Russia, Australia, Indonesia.
Okay. Yeah.
Okay. So moving forward, especially with this expected uptake in demand for electric vehicles globally in the EU, in North America, in China, potentially in Japan, although they've done logistics on that, maybe not straight away. Moving forward, I think something like nickel is going to do very well, as would its counterpart lithium.
Yes, right.
Yeah.
So nickel could do quite well. Nickel, the actual commodity of nickel is on a 13-year high. So one would argue, even though the commodity is on an all-year time, you think that nickel stocks could continue to run?
Absolutely.
Continue to move up.
I absolutely do think so.
Let's cycle to iron ore. Let's keep back to the iron ore because that is one that is also very overheated. Is there value to be had in Fortescue? Because Fortescue Metal is a business that's done exceptionally well.
Yes.
But iron ore, it's got to come down at some point, or does it? Can it just keep running? I mean, I know Caroline's got a very biased outlook that's towards the north.
Well, look, again, it's going to be one of those ones that has many vectors by which it would, do well or do poorly. The chief amongst those probably being Chinese demand.
Yes, right. Okay.
So as long as we have this narrative that, the Chinese are going to be doing an infrastructure-led demand, how much infrastructure can you develop? Hard to say. It's a relatively developed country. But I think, at least in the short, medium term, it will still do very well.
So there's a pretty strong argument to be made that potentially direct commodity players, even though they might have further upside, they're overheated right now. Certainly, I don't think anyone's going to say that they're not. They are close to all-time highs. But I noticed that there's some other businesses. I know one of the ones that we've been bringing in in the past has been things that help with mining camps and mining operations, things like Downer and Seven Group Holdings, etc., because they do a lot of the infrastructure around the mining. Because the logic behind that is if the commodity price moves up, more people want to mine it, therefore they need to build more mines. And something like Downer, even though it's not directly involved in mining, it is something that could do quite well because there's more mines popping up all over the place. Is that correct?
Well, I think it's probably a very safe and fair assumption to make.
Okay, so we're looking maybe for investors, maybe thinking about the other avenues that you could benefit from this commodity surge.
Absolutely. Well, I think just leveraging off everything you can, it makes logical sense that someone that is involved in mining services would do well at a time in which mining operatives and the actual commodity which they're mining is, moving in a positive direction. And it's sort of, it's self-fulfilling.
Very good. Very good. Ladies and gentlemen, that is the best and the worst on the ASX this week. Now, do you have a stock that you've been watching for a while? Is it time to buy, sell, or maybe average in? Why not send us a message and we can ask our panel. In the meantime, let's take a short break and we're going to be back with the final section of the show.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Trust is key to any relationship. Fortunately, it's nothing that can be bought. It's earned. As an investor working with an organisation, they need to demonstrate integrity. They must show consistency, full transparency, accountability. They must be genuine in their approach. Their core values must align with yours. They need to put your interest first. If you are considering investing, work with an organisation that earns and nurtures trust. Work with an organisation you believe in. Work with an organisation that treats you the same way they like to be treated. Join an organisation that views clients as people, not people as clients. If you are considering investing, consider KOSEC KODARI Securities.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Welcome back. Now, the moment we've all been waiting for, the final section of the KOSEC Show. So this is what investors are really looking for now. We know what oil, gold, and the dollar has done. We know what the top performers for the week were. Now, let's look at what our panel has to say, and we're going to jump straight over to our senior trader, Linson Cow. What are you looking at this week? Why do you like it right now?
So no suspense this time. Nick Scarley. So Nick
Just
Scarley.
no suspense. It's going to come straight out and just say,
into it.
yep,
I want
that's
to
it.
keep you on your toes. I'm going to give you a little bit of time to come up with the pun. Nick Scarley. So furniture retailer. So they source and retail higher end household furniture and related accessories. So they've actually been around for a while. I remember when I was a kid, and actually my time as a kid was much longer ago than everyone else on this panel, but they were around then as well.
Yep.
So he's still going strong. So very well done to him. Have been in there. Never actually bought anything because I'm in an apartment. So they do have very nice stuff, but I have to be a little bit careful with space.
So they do online sales of furniture and also in-store, like showrooms.
Yeah.
Okay.
I always think of the showrooms. That's because I'm a little bit of a dinosaur. But also part of the reason I like this is because this guy has an amazing name. So his full name, Nick Scarley, is Nicodemo Domenico Scarley, which I thought was incredible. So it's one of the best names I've ever heard.
That is certainly. Is it quite common though? I'm assuming that in places outside Australia.
I'm sure each of them individually is quite common, but to me, and this is probably is more common than I realized. But it's like if your first name was Mary Ann and your second name was Anne Marie.
Wow.
Like, I just think it's an amazing name. He's also the president of the Italian Chamber of Commerce.
That's not a
and Industry in
reason
Australia.
investors should just invest in it.
Yeah, I'm not suggesting that.
To
be clear, not part of our top-down investing strategy at all.
Not part of the strategy.
The
we like
CEO.
we like the CEO's name. Though.
There are many reasons to like it though. So it's ASX 300. Now, revenues, earnings, and cash flows have been stable or increasing over the past 3 years. So revenues compound annual growth 4%, earnings 18%, cash flows 29%. So I like all of those. Upgraded their profit guidance last week, so that was a little bit of a catalyst for it.
What did it do on the back of that on that price?
I mean, what did it do? It did more than 10% in 2 to 3 days.
I was under the
like
impression
that.
it was almost 10% in one day, and
Yeah,
then it
that's
went
right.
up the next day as
Yeah.
well. It continued to rally.
I mean, I'll discuss this when we look at technicals, but I actually do quite like pretty much every aspect of this, our top-down approach with it. But as part of their profit guidance, some of the highlights were they expected NPAT, so net profit after tax, for the first half of this financial year to be up 100% approximately from the prior corresponding period. So that's double. So the sales order book was at an all-time high. And they've also seen increased delivery volumes. Now, part of that is driven by metropolitan Melbourne opening back
So
up.
just talk to me about this. So this, because I mean, this was something that we did have, that we have exposed a lot of our clients to. We've sent it out as opportunities before. We've mentioned it on numerous occasions before this big pump. The pump was unexpected. We didn't know that was going to be coming out. It was obviously very welcome. It certainly moved in a positive direction very quickly, which is absolutely great. Is this a foreshadowing of what's going to come with the other retail sectors spaces? I mean, well, the other, so like JB Hi-Fi, for instance, Kogan, are they going to do something similar, or will they upgrade as well, do you think?
Okay, it's a yes and no. So
What's
here's where I'm going to say the no. The no is just because these guys have upgraded, not necessarily. I do suspect a lot of them will, but I don't think it's going to be across the board. Where the yes comes in is that we got clients into this after we saw, it's not like we did any insider trading. We didn't have insider knowledge. The announcement came out, it looked attractive, we got clients into it, and they still made a lot of gains very quickly.
After it was
Exactly. Okay. So just because the announcement's already out and has a little bit of a spike, you can still get in with the right timing and still make money out of it. And I think that's the lesson to take away with what happened with Nick Scali last week. So that's something to look out for during
And this is
season.
what, like a week or so post that announcement, and you still think it's a good buy on technicals? Or?
On technicals, and I'll get to that in a second. So Citi is one of the few that have come out with a recent broker report. So they still have it as a buy, target price 6 to 7% upside. Now, it's actually their top small cap pick on the ASX, which I thought was quite telling. They like its 8% dividend yield, but on top of that, it's got a price earnings ratio of 11 times. Now, that's actually relatively low. That's what financials and banks would normally trade at, not something like a Nick Scali. Now, for context, JB Hi-Fi is around 16. Baby Bunting is in the mid-20s. Kogan's in the mid-30s. Now, of course, they're not
That's
all
their PE
exactly
ratios, yeah?
Exactly. So they're not all exactly the
low
same.
PE ratio stock, 11%.
Yeah, so that's part of the reason they like it. And I think that's another reason potentially why it's looking attractive, because it's still potentially an area of value. Now, if we bring up the chart, and I'll talk about the technicals, you can see clearly in the upper Donchian channel, Williams Alligator uptrend. However, you can see here that it had that run up, it had the pullback, and it pulled back approximately half of its run up.
Yes.
But it stayed above the mid Donchian. So it remained in the upper Donchian and it's resumed its ascent. And that's generally what I personally like to see. So when things tend to run very, very hot, you kind of don't know how big the pullback's going to be. But once you see the pullback and the resumption, I feel like some of the risk has been taken out of it and you can be a little bit more confident that now is a good time for entry. So that's why I still like Nick Scali.
So that's Nick Scali, and you might be catching it right in the nick of time.
That is exactly what I told Caroline you were going to put the pun on. So 1 from 1.
Very good.
Right.
Very good. All right, let's go over to Gabe. What's your stock that you're looking at this week, and why do you like it right now?
Well, we'll discuss what we discussed before.
Okay.
Nickel.
Yes.
I mentioned that, and for that reason, I like a lot of nickel producers.
I'm feeling very suspense. I've got a lot of suspense. Yes,
well,
nickel. Yes.
I think with anything, you want to leverage off things which are going to be moving in a positive direction potentially.
Leverage is good. Yes.
So why wouldn't you consider looking at nickel miners?
Right.
I brought nickel mines a couple months ago.
What's that done since then? It's roughly
25%.
25% last since you mentioned it, so done very well.
Yep. Again, you're just leveraging off the positive movement of the underlying commodity. In that case as well, you could postulate that another nickel producer could do well. That's a company called Western Areas Limited. The ASX code is WSA. Now, this is one which, looking at a technical chart, if you actually want to pull that up, just touch on this first. It's been on a pretty longer term downward trend. Wasn't really moving overly positive for quite some time.
Man, that stock was really hitting west for a while, wasn't it?
There we go. Obviously dipped during March. It's dipped recently as well. Seems to have broken out of it. Now, it's one of the situations where we have this commodity nickel, which is going to be used so much more in the future alongside other materials, of course. Leveraging off the producer, something which could be quite beneficial to you, has been moving pretty positive recently in the past couple of months. If you look at financials, it's top 300. Sales, cash flows, earnings increasing for the past 3 years. So notionally, despite COVID, still did very well. Earnings will potentially increase. And when you consider that price targets for the actual underlying commodity of nickel potentially in the medium term, 10% higher from where they are now, that would postulate that potentially the earnings for a nickel producer would be positively impacted by that, right?
Right, yes.
Maybe WSA could be a company which does very well. Macquarie does have a price target of $3.30, which is well above the current trading price by a margin of around 17%.
Okay, yeah.
Potentially there's something that could do really well moving forward in the near term, in the short term, and potentially in the long term.
Well, you got it right with nickel mines. Maybe Western Areas will be doing the exact same thing. Let's go over to Caroline now. because you are one of the star pickers here. You obviously got Fortescue Metal, and that's been certainly running on. But I'm getting a little bit sick of you just going on and on about how it is. In fact, I don't know if you guys know, but every Friday she comes to me and says, "I did so well on Fortescue. Do I have to pick another stock?" And we go, "Well, yes, you do. But you've got a really good one this time. Why don't you share us what your opportunity is and why you think it's looking good right now?"
So my opportunity today is IGO Limited. ASX 200 company that derives its revenues through mining and exploration activities. More importantly, the beauty about this company is that it's very heavily exposed to a wide variety of metals.
It's quite diversified, yeah?
Yeah, correct. So it does nickel, it does copper, it does cobalt, it does gold.
Mm-hmm.
So macroeconomically
So I know
speaking,
I know cobalt also goes into lithium-ion batteries as well. So you got nickel mines and it's got nickel and cobalt in there as well. So yeah.
Yeah. So macroeconomically speaking, I think it is a very strong position because nickel is at a 13-year high, as you said earlier. Copper is at an 8-year high.
Wow.
Also, along with the passing of the recent stimulus bill, commodities tend to do very well because it's used as a hedge against inflation.
A lot going for it, yeah, okay.
In terms of financials, very, very stable financials, revenues, cash flows, earnings increasing in the past 3 years, even during COVID, especially since last year, their earnings actually doubled. So that's very good for a company like them. Institutions such as UBS and Credit Suisse like them a lot. And as such, in terms of the charts, if you look at the chart, it has been upward trending since November 2020. Had a 10% pullback last week, but has now started to make a very steady rebound. Was that what you liked about Linson?
Yeah, it's exactly the same thing. I like it when it goes up and then retraces, but not too far, and then resumes.
Okay, so it's a healthy pullback, we would say.
Yes.
Okay.
Trading above the mid-Donchian channel, stochastic oscillator, diverging in a positive direction, and alligator teeth all wide open.
Very, very, very good. So you like, so we've got Gabe, he likes our Western areas. We've got Linson, you like Nick Scarley, and you like IGO Limited. Very good. Ladies and gentlemen, you heard it here first. Thank you very much for tuning in this week. On behalf of everyone here at the show, I want to wish our clients, friends, and colleagues a safe and happy weekend. And we look forward to seeing you next week. My name is Will Brownlee, and this has been the KOSEC Show.